Veterans, active duty service members, man, oh man, do we have a treat for you in store today. This has been a production, if you can say that, that's been some time in the making, and that I am super excited to have my friend Fong Lee here with us. She traveled out here this morning. You guys get a load of this. She just told me before we went live here that she got up at 04. She left Orange County, California, right? And I don't know if you guys know this, but I'm located in Arizona, right? And how would you say that there's a slight contrast between weather in the summer in Orange County and in Arizona, probably about 35, 40 degrees. And so she's leaving the beautiful summer weather of Southern California to come here to pour into each and every single one of you watching this video. My friend Fong is a VA underwriter. She's been doing it for, well, we go way back all the way to 2014 when we were serving veterans and active duty service members together, getting their VA loans approved. And you guys get ready for this. She is a United States Marine Corps veteran. And so, Fong, I am so incredibly grateful and appreciative to have you here with us today to pour into veterans, active duty service members. As far as I know, there is no other video that veterans will have access to that are going to learn about their VA home loan benefit, not just from me. They can get videos all the time from Jimmy B on VA loans, right? But they get to hear from you, a VA underwriter. I was talking to Fong this morning, you guys, before we went into production here, and she told me that actively right now in her pipeline, you ready for this? She has 40 loans in process. So this is the hard charger. Quite frankly, this is the badass, right? That you guys are going to be able to learn from, somebody who is literally approving VA loans each and every single day. She understands the process, right? And you guys are going to be able to learn from her on what VA underwriters are looking for when it comes to VA loans. So today I get to take a little bit of a break, and I'm the one that gets to ask the question. So speaking of a question, the first question that I have for you, and of course I have a biased opinion here. My audience knows this, right? But I have a special place in my heart for United States Marines. Of course, what do you expect, right? I'm a United States Marine Corps, not as lean anymore, not as meat anymore, but I'm still a Marine, right? But Fong, I would be remiss if I didn't ask you the question: what made you decide, to join the world's finest, United States Marines? Where did that come from? Because you shared, I'm sorry, really quick, I've got to add this in. Fong immigrated to the United States as a youngster, 5 years old. She came from Vietnam, right? And she decided to join the United States Marine Corps. So I want to hear the story on that. Can you talk about what made you decide to want to join the Marine Corps?
Well, Jimmy, thank you. First of all, thank you for having me here. This is so exciting. The studio is amazing. It's beautiful. So when I was 14, I knew when I was 14. And do you remember when, way back when, they had that commercial with the U.S. Marine climbing that table and then that chess set?
I do.
Do you remember that?
Yes.
Okay. So when I saw that commercial and that guy is climbing up that mountain and he gets on that chessboard and he pulls out that sword and he says, the few, the proud, and the Marine, that there sold me. I wanted to be that Marine. I knew at 14. And so when anybody says that, okay, they're too young, no, if you know, right, when you want it, you want it.
Yeah. And Fong shared some sage advice with me this morning. I'm going to save it for the end here because I want you guys to continue watching the video, but I'm going to share it with you a little bit later on this morning. So guys, here's the deal. You know how I talk about when I say, call somebody that speaks your language and knows what it means to serve, right? Here's the neat thing about Fong today, that not only are they going to hear from a VA underwriter, but they're going to hear from a fellow veteran that knows what it means to have served, a fellow veteran that is approving VA loans, a fellow veteran that is going to help veterans and active duty military to better understand their VA home loan benefit so they could take advantage of this, what I refer to as, and again, biased opinion, but the most glorious benefit that exists when it comes to home buying that's available on the marketplace, and that is the VA loan. So ladies and gentlemen, do me a favor. If you're grateful that Fong is here, drop a like on the video for her, right? Show her some love, right? And in addition to that, I hope this is okay with you, Fong, but one of the things that I always do in my videos is that I say, look, if you have questions, drop a comment down below with your questions, And either myself, or I hope this is okay, I don't know if you'd be willing to, answer some questions for veterans and active duty military, but would you be willing to answer their questions in addition to me when this video is released?
Oh, absolutely. I think it would be an honor. I just love your video podcast, your video YouTube videos. I
Thank you.
watch it all the time. You're just like such an inspiration, and you're doing a great service for our veterans, our home buyers, our lending community. So I'd be more than thrilled to be able to answer that.
Outstanding. So that leads me to my next, or really first question here. And I feel like the VA loan for a lot of veterans and active duty military is like somewhat like shrouded in secrecy. The military doesn't advertise this stuff, right? Or really teach it, I guess I should say. The VA loan certainly doesn't advertise, or the VA Department of Veterans Affairs doesn't advertise it. So I always say, how in the world can we expect our veterans and active duty military to understand it? And the reality is that they don't. And I think that that's one of the things that's neat about our channel here, is that it's educating veterans and active duty service members on how to properly deploy this benefit. So now that we have you in the chair today asking questions, I think the most appropriate question first and foremost is what exactly does a VA underwriter do, right? In other words, does the VA underwriter that's approving a loan for a veteran, do they work for the VA, right? Obviously, I know the answer to this, but I was hoping that you could maybe discuss that a little bit. What does your daily kind of life look like as an underwriter? What do VA underwriters do exactly?
Yes. So VA underwriters, we do not work for VA. We work for a lender. So my paycheck is paid by my company, my employer. So ultimately, what an underwriter does is they're responsible for the decision on the loan, to make sure that the loan is complete, make sure that there are any errors or omissions, that it's all corrected with conditions that we might have to send to the borrower to explain. And that at the end of the day, what we're expecting to do at the end is to have a sellable loan. Right? So think of the loan process as an assembly line, right? So it starts with you, the originator,
Right.
and then it goes to the processing team, and they organize, they put everything in order, and then it comes to my desk, and I'm reviewing the full file, and to make sure that there's no missing documentation there, and I review it against investor guidelines.
Right.
So ultimately, my lender, my employer, who I work for, we have to make sure that we can sell that to the end investor. So that's what I do.
And I think you make a really good distinction there when you say that you don't work for the VA, because one of the things that I've learned over the years is that oftentimes mortgage loan originators, they get into a pinch in a file because they didn't properly assemble it, right? And then it ends up getting suspended for whatever reason. They'll do this, veterans. They'll go, well, the VA underwriter said, right? And if you take that at surface level, you could think that it's somebody down at the Department of Veterans Affairs that's having a bad day, maybe hasn't had their coffee yet, right? And they're just not approving the loan. But Fong makes an important distinction that she's responsible, right, from her kind of desk, if you will, that she is ensuring that the loan meets the VA guidelines. So that way the VA will provide their 25% guarantee, which we'll talk a little bit about later. But Fong is not an employee of the VA. She has a company. That company is Canopy Mortgage Canopy Mortgage. She is a underwriter for that specific company. And her job, once again, is to ensure A, the loan meets VA guidelines, and B, you talked a little bit about the investor piece, right? This is something that a lot of veterans aren't privy to. They don't understand that when mortgage loan originators originate a file and that file is funded, meaning you guys, the loans are sent out, you guys then get your keys, it becomes official, it's recorded, that an investor is picking that loan up afterwards. So not only does she have to follow and ensure that the loan is meeting the VA's guidelines, right? You also have to ensure that you are approving that loan according to the investor guidelines. So she has a deeply important role in her position and in her company to ensure that both parties' needs are being met, the VA and the investor that's purchasing the loan. So one of the things that we were talking about in pre-production, and I just thought that this was like such a kind of an aha moment, easy to follow. You know, it's like Marines, we like to keep it KISS, right? What is it? Like keep it simple, stupid, or stupid, simple, or something like that. Anyways, I had asked you the question, what exactly are VA underwriters looking for when approving VA loans? And you said, Jimmy, we're looking for the 4 C's. And I had never heard of this before, but here's the reason why I think that this is important if you're watching this video. You're going to get to hear from a VA underwriter on A, what the 4 C's are, and B, you're going to be prepared for the 4 C's when you get ready to purchase your home. So Phong, can you tell us a little bit about the 4 C's and what that means exactly when VA underwriters such as yourself are looking at a file?
Oh, yes, absolutely. So when I'm looking at a file, it's a very massive file, Jimmy, because we're looking at the whole picture of the borrower, not only the borrower, but the collateral as well. So the 4 C's. First, it's the credit. I'm reviewing the credit report. Does the borrower have the credit score in order to meet the investor's requirement? I'm looking at the capacity. Can the borrower afford? That's reviewing the income documentation. I'm looking at the collateral, which comprises of the appraisal, the title preliminary report, the sales contract, and do we have a property that is sellable value-wise? Is the seller the owner of record? So they all have to jive together on the collateral piece. And then capital, and that's the money. While we know that VA loan is 100% financing, the borrower still needs to bring the closing costs. They need to pay for the earnest money. So we have to review the bank statements as well.
Right. That's important to understand. So the 4 C's, I'm following with you on that. And you talked about the first part, credit. A lot of veterans think that when they get a VA loan, it's like, well, VA is going to automatically approve my VA loan because, well, if you kind of roll up your sleeves, and we'll talk a little bit more later about the VA lender's handbook, but guys, believe it or not, VA does not actually have a minimum credit score requirement. But do you remember what I just said earlier about Phong making sure that the loan is underwritten to the investor's guidelines? Well, guess what? The investor has a credit score requirement. The investor has something called lender overlays, right, that they put on top of the VA loans guidelines that Phong is ensuring that are being met. And so you talked a little bit about the credit. And I guess my follow-up question to that is, Phong, is there a specific credit score that you're aware of, or will that vary between investors on what veterans should look for when getting their VA loan approved? Can you talk a little bit about that?
Yes. The credit score, like you said, a VA doesn't have like a bottom like requirement. They don't have that. But each investor has their own risk threshold, right?
Got it.
So some lenders are okay to do a manual, and that's acceptable. Some are okay with doing down to 620. Some may not. There's DTI requirements as well.
Right. Debt to income ratio.
Debt to income ratio as well. So each lender has their own requirement.
Got it. So theoretically, and I guess this is a question that I had for you later, but since it's coming up now, I'm going to ask it. Is it possible for a veteran to be told no by one lender, but be able to get a VA loan somewhere else?
Absolutely, because again, the threshold of each particular lender, they have a certain risk appetite. And if you go to certain lenders, they will do it, and some others will not. And the biggest thing that I advise my sisters, anybody that's asking me about loans at all, is to get a pre-approval. Find yourself a good lender that knows and is experienced, especially on VA loans.
Especially on VA. That's one of the things that I always talk about. It's like, you know, anybody can write a loan, right?
Exactly.
But the VA loan is nuanced. There's a lot of moving parts when it comes to the VA, just like you were telling me earlier that there's certain classifications that you as an underwriter have, one of them being or having the ability to approve VA loans, you know, as being a SAR. We'll talk a little bit more about that in a bit. But, you know, my philosophy is that a veteran shouldn't work with somebody who doesn't understand or have a deep understanding of VA home loan benefits. By the way, did I tell you guys that Phong and I worked together for, I mean, it's probably 5 years, and together we've served probably hundreds of veterans together. I'll tell you a quick follow-up story here. And one of the things that I appreciate about Phong so much is that, you guys, it's important for a mortgage lender or a mortgage originator to have a relationship with their underwriter, okay, more than just via email, right? And a relationship between the two helps to get your loan approved quicker and more efficiently. So I'll brag about you for a second here, but one of the situations that arose many years ago, and I never forgot this, and I don't think I had told you this, but I received a phone call, and it was Phong. And Phong said, "Hey, Jimmy, you know, there's some concerns that I have about this veterans loan, number one, but number two, I'm looking for solutions to be able to approve this veterans VA loan. And that was the first time anybody ever did that for me, Fong. And I never forgot it, and how deeply thankful and appreciative I am because of it. So this Marine, right, has a heart to help veterans, right, get into their homes and utilize their VA home loan benefit. And it's not just, nope, this doesn't meet VA guidelines, throw it away, throw it out the window. It's all about looking for solutions on a loan. Can you talk a little bit? I know that wasn't on my questions, but can you talk a little bit about like the solutions if something comes to your desk, and maybe just looking for ways to ensure that it's not no, but here's how it can be yes?
Before I start on that, the answer to that question, I like to tell you, our audience as well, the same story, right? I remember that conversation because the next day, maybe not the next day, but the day after or so, I received this massive orchid. Massive. I don't know if you remember, you sent it to me, but it was the most beautiful thing ever. And I was like, I just called him just to tell him, how can we make this loan work? And you sent me this massive gift. And there I knew this is a good person. This is someone that appreciates, that wants to do good for our community. And we've been friends since. Like, it was the coolest thing. So thank you. Thank you for that.
My
I don't know if I probably said thank you, but thank you again.
My pleasure. My pleasure. I'm glad you enjoyed it. And so you were talking about, being a solution-based underwriter versus being somebody that says, nope, to the side, I'm going on to the next file because that next file is going to make me money. You don't do that.
No, I don't, because I think a solution, we want my job, because there is that fine line between making sure we have a sellable loan.
Right.
I do want to get our borrowers into the home. I believe in it. I benefited from the VA loan myself.
Yeah, and you use your VA loan.
I use my VA loan, and maybe I can talk a little bit about it, because when I moved back to Orange County, I used my VA loan to purchase my first home in California. And it was a fixer-upper. And when we bought it, we needed a lot of work on that. And so we poured our own money into it. And then after that, we got to cash out to pay back all those high interest debts. Mm-hmm. Then when the market dropped, the interest rate dropped, we got a VA IRRRL. So I went through all the loans. So I can understand where our borrowers are coming from, because I've been on both sides.
That's beautiful to hear you say that. It's like, not only did you serve in the military, not only do you approve VA loans, you've used the VA loan yourself. In addition to that, you've used the purchase money VA loan, you've used the cash out VA loan, and then lastly, the VA interest rate refinance reduction loan. It's like, you speak their language.
I do. And I think that's one of the reasons why I think I've always been a solution-based underwriter, because I want to make the loan work, because someone gave me that opportunity. And I think when I have a very complex file, and the loan officer is reaching out to me, asking me a question about it, I want to make it work as much as the originator as well. So I think it's important to have that conversation, not to suspend a file, definitely not to deny a file.
Right.
I hate that word, honestly, because why can't they change it to maybe later? Maybe later. So I think that's important, because we want our veterans in the home. So yeah.
Amen. Amen. I'm curious. We had talked a little bit about some of the different, just number one, types of VA loans, but number two, I was wanting to know, did you have any specific recommendations for veterans that are purchasing a home that, that they can, let me rephrase this question. Do you have any recommendations for veterans that are wanting to purchase a home about how they can prepare? Because I feel like there's a lot of things, you talked about the 4 C's. I think that's good, but there's a lot of okay, where do I start? What do I do? What's the documentation that I need to put together, right? All of this is going to come from a mortgage loan originator, of course, but do you have any best practices or tips that somebody can kind of help themselves to be prepared for when they do want to purchase a home, whenever that time may come?
Yes. Find yourself an experienced VA mortgage loan originator. I mean, that is the most important thing. That starts your whole journey.
Amen to that.
That starts your whole journey. And then from there, the communication with your loan officer, because they're going to walk you through the steps. Because even though as an underwriter, I was on the other side, I was still stressed. I knew what to expect, but still at the same time, it's a stressful, very arduous journey that you're going to go, like the 30 days that you're working on that file with your the loan officer. So finding that experienced VA mortgage originator is key in the whole process. And then really staying proactive. I think proactive is the most important thing in communicating. If you've lost your job, communicate that, because the last thing you want to do is be nervous, be scared, and not tell your originator that this is what's happening to me, because then they can fix it. Because the last thing you want to do is go to the closing table and we do the verification of employment at the closing table, maybe the day before, and you've lost your job. That will totally derail your whole entire loan process, and all that work that you've done is for naught.
So just to repeat what I heard you say here, it's like communication with your mortgage loan originator, you guys, right? So when we take on a loan from you, or when you submit a loan application with me or anybody else, right, we're going to review your credit. And then from there, we're going to send you out a documentation request list. This is going to be all of the necessary documentation, right, that we'll need in order to fully process and approve your loan. It's like what I hear you saying is take that stuff seriously. Whatever the mortgage loan originator is requesting, provide it to them, right? Make sure that you're organized when providing that additional documentation, right? Give it to them, because here's what it's going to do. It's going to help streamline the process for these veterans and active duty military that are purchasing their homes. And when I say streamline the process, it means you're going to get into your home quicker and more efficiently by doing so. So I guess the only thing that I would add to that is, like, in addition to the communication, take this stuff seriously. Right? Purchasing a home is arguably the largest financial transaction of one's life, right? Make sure that you're dotting the I's, crossing the T's, having your DD-214, your certificate of eligibility, the, W-2s, bank statements, pay stubs, et cetera, right? But providing all of that up front, in my experience, when a veteran does that, really tremendously helps to streamline the process, because they come out of underwriting, they don't even have any conditions. Conditions are documents that Fong requests that I forgot to put in the file, right? I don't like to get requests from Fong and saying, Jimmy, I need an updated bank statement or a pay stub. It's like, I knew I should have put that in there, right? So that's what we're trying to avoid. And that's less times that we have to come back from, that I have to go back to you because Fong's having me provide updated information to the file. Sometimes you can't avoid it, and that's okay, right? Mm-hmm. But there is a lot of stuff, and I'm sure that you could, put a stamp on that and say there is a lot of stuff that mortgage loan originators may leave out of the file. It's like, no, we need that, right, to ensure that that you're meeting those investor guidelines and VA guidelines as well. I think that that's beautiful. One of the things that I also we were talking about earlier, and you brought this to my attention, and I'm like, man, that's really good. And quite frankly, I don't think I've ever really talked to you guys about it in detail, and we certainly haven't heard it from an underwriter's perspective, but assessing risk on VA loans. Like, what exactly does that mean? Risk is important to understand in mortgage lending, right? Because the riskier the loan file, right, that could ultimately determine that the loan is not approvable, which is obviously what we're trying to avoid. So mitigating risk, right? Assessing risk and using the proper kind of automated underwriting engines to be able to assess that properly. I don't think veterans truly understand that. And I was wanting to know if maybe you could talk about that a little bit, whether it be DU or LP, et cetera.
Okay. So our loans go through the system. We call it AUS, Automated Underwriting System. So what the ideal is to get back an approval.
Right.
If that's what my job is, easy then. Not necessarily easy overall, but that's one less thing I have to worry about.
Right.
But let's say it comes back refer. And what happens when it's a refer? We downgrade it to what we call a manual. And that is an additional more reviewing the file.
But that doesn't necessarily mean that the veteran's not going to get approved for the VA loan, right?
Absolutely. Okay. So in essence, a manual underwrite happens quite a bit, right? Because overall, VA likes to think of the loan as a manual, even though we get the automated approval, because that's the sellability. But overall, all loans are manual because we are reviewing the file in its entirety. But let's just say that I get a manual on my finding. Then I would have to go and review the credit report in a lot more detail, which means that the last 12 months of history is so critical. Because if you have any late payments on consumer debts, If you have a late payment on a mortgage, that's pretty much maybe later. So we can't do that, the loan
You
at that
guys
time.
notice how she said maybe later? She didn't say no. She just said maybe later, right?
Right,
I always like
yeah.
to say to my veterans, it's not a matter of if you're going to become a homeowner, but when you're going to become a homeowner. I think that that's perfectly stated. Thank you for sharing that. Maybe later. So if the time is not right and you're not in an approvable kind of scenario or situation, that doesn't mean that you're never going to be a homeowner. It's just we've got to put together a plan of attack, as we would say in the Marine Corps, right? To ensure that we could set you up for home ownership. I'm sorry to interrupt there. By the way, really quick, you guys, I want to say this. If you are enjoying this content, if you're enjoying this information, could you consider showing some love, clicking like on the video, showing Fong your support, number one. And number two, if you feel like we've earned it, consider showing your love, liking the video as well. It would mean a lot to us. It helps to promote the video to veterans and active duty service members and really get this information out there, to as many people as we possibly can, because the VA loan for many is shrouded in secrecy. Like, at the end of the day, I said it earlier, military doesn't teach it. VA doesn't really advertise it. Mortgage loan originators don't understand it. So how in the world can we expect our veterans active duty? And they don't. And that's why we're here. All right. To make sure. So you were talking about risk.
I was talking about risk.
In the 12 months,
right.
And kind of maybe it's a later deal or something along those lines.
Right. So we're reviewing for the most recent 12 months. So say if a borrower does not have a mortgage history on their credit report, then we would, in order to consider overriding the manual, because we're finding ways to consider the borrower as an acceptable risk. Even though we have a manual on this particular file, we're looking at possibly getting a verification of rental. That's sending it to the landlord. If you're making your rental payment, the likelihood that you can make the mortgage payment is what we're looking for.
So that's a big part of it on a VA manual underwrite. If they've got a clean 12-month verification of rent, they've made their payments in a timely manner, to you as an underwriter, that goes a long way. That
goes a long way, because that's assessing risk right there. And we're finding ways to, okay, is this borrower a safe bet? That's what we're looking for. So we're reviewing the last 12 months and the verification. If you have late on your verification rental, there's a concern. So that's a big red flag right there.
Got it.
So then, yes.
So you were also talking about red flags. One of the things that I thought about, and something that you taught me years ago, is, oftentimes mortgage loan originators, they'll take your bank statement, they'll put it in the file, they won't even review it, right? Well, in some circumstances, if a veteran hasn't properly budgeted his or her finances, there could be something referred to as NSFs, right? Non-sufficient funds. And one of the things that you taught me years ago is to look out for non-sufficient funds on banking activity. Would you also consider NSFs to be kind of a red flag?
Yes, for sure. Because that's another thing that I'm looking for too, because if they are not able to manage their budget, make timely payments, or if they do have the non-sufficient funds, that's a red flag right there. But besides that, I'm reviewing the bank statements for every single line item at that point, because if I have bank statements in the file, I need to look at potential expenses that they have that's undisclosed, that's not on the credit report. Say you run a credit report and the bank statements come in after that, and they've actually taken out an auto loan. You don't see it on the credit report,
right?
But you're going to see it on the expense as a payment to Volkswagen, whatever it is, right?
And so, guys, we can't try to play the game, trick the underwriter here, right? Underwriters are highly trained in ensuring that they're assessing the loan once again for all of the potential risk involved. Now, one of the things that I want you guys to know and understand is that maybe if we're not in the position to be able to purchase a home today, Fong is giving us the blueprint, right? Making sure that we have a clean 12-month payment history, making sure that we're managing our bank account and bank statements, right? That there's no NSFs, non-sufficient funds, right? In addition to that, keeping your payment in line with where your current rent is. We don't want to have something called payment shock. Can you talk a little bit about payment shock and what that would maybe potentially mean to a veteran or active duty service member?
Yes, absolutely. Payment shock is a big thing. While VA doesn't have a requirement on it, we're looking at that as a potential another risk that may impact the borrower. If you're making $1,000 rent payment and you can barely make the rent payment, you have non-sufficient funds. Now, how are you expected to be paying a $2,000 mortgage payment? That's a
your
huge,
payment's doubled.
That's 100%, right? That's like, yes, that's doubled right there. So that's something that we're looking at as when you're reviewing a manual. And right, the payment shock if the borrower cannot handle a $1,000 rent payment, it's unlikely that they can handle a $2,000 payment, and that's what we're looking for.
I want you guys to understand something. You know, I don't want this to sound self-serving. Having said that, it is so important that you're working with a mortgage loan originator who knows and understands VA loans and understands the guidelines. Because if there's people out there that are just order takers, right, they might send you a pre-qualification, but they haven't necessarily vetted out the veteran's overall financing package quite like Fong will. And you had talked about it earlier, you know, part of my role as a mortgage loan originator is to assess risk, right? Is to look for these things that you could potentially look for when approving the VA loan. It's not my job to submit a veteran's loan, throw it up against the wall to see if you're going to approve it. It's like, no, that's doing your veteran or active duty service member a disservice. We have to do all of these things up front. So that's why it's important when Fong says, guys, like, work with somebody who knows and understands VA loans, whether that be me or somebody else, right? Of course, I would be honored to serve you if the opportunity presents itself, but at the very least, make sure that somebody's going through your loan, doing kind of a preliminary underwrite up front to ensure that when your loan makes its way to Fong's desk, that she's going to say, oh, this is a beautiful file because this veteran or active duty service member watched my video, right? They took my advice into consideration and they took advantage of their VA loan as a result. And so, you know, you talked a little bit about this earlier, about how you've used your VA loan to do different types of things, which I think is just so cool. You're a Marine, you're a VA underwriter, and you've used your VA loan. This is just, did I tell you how grateful I am that you flew out here today from California? She got up at 04.
Don't stop.
Yeah. She got up at 04, you guys, to get on a bird and come out here and shoot this video because she cares about you, veterans and active duty military, and she wants this information to get out there. So I just think, again, that's just so neat. But I'm wondering, is there anything in particular like that you want veterans to know and understand about VA loans? I know when we were in pre-production, you had talked about the certificate of eligibility. That's a form that a lot of us were like, we get it. You guys have seen my videos before on the certificate of eligibility, I would imagine. But, you know, we get this form, right? And we look at it and it says 36,000. I can't qualify for a vehicle loan for 36,000. So how in the heck am I supposed to use my VA loan? It's like, I was wondering if you could maybe share with me, in light of all of that, you know, is there anything about VA loans in particular, the certificate of eligibility? You had said this earlier and I thought it was so beautiful. It's like the heart of the VA loan is like the government's promise to back up a veteran or active duty service member. Essentially, they're guaranteeing that loan in the event of default. And that's important. That's serious. Like, that is a blessing to us as veterans and active duty service members that I don't use this word often, right? But that we're entitled to, because daggone, we earned it, right? We're entitled to use this benefit because of our sacrifice. Is there anything that you want to add to that or share on top of that?
Yes, the certificate of eligibility is a very crucial document. It's the promise, like you said, Jimmy, like we talked about.
No, like you said.
Like I said.
I was quoting you, sister.
Okay, it's the government's guarantee. They are guaranteeing that they will pay a portion of the veteran's loan to the lender in the event that there is a default.
Can I stop on that for just a second and interject, if I may? A lot of veterans think that they get a VA loan from the VA. In fact, you know, we mortgage loan originators, we actually use that term wrong, right? Fong is absolutely right. It's a VA guaranteed loan. The lender is still lending you, the veteran or active duty service member, the money, right? But VA over here on the kind of out of the scene, right? They're the ones that are saying, hey, you know, that loan that Fong just approved to you, the veteran, active duty service member watching this video? Well, in the event that they default on the loan for any reason whatsoever, right, we're going to send a check to the lender for 25%. So to the veteran or active duty service member, or even to the investor, it's like the veteran is putting down 25% on the loan. So that loan is therefore more attractive to the lender and or investor.
That's correct. That's correct. And the only way that you know that you are eligible for the VA loan is the certificate of eligibility. And if you do not have it, then there's no VA loan.
Right.
And when I get the certificate of eligibility, what I'm reviewing for, it's actually the story of our veteran. It tells me the name, it tells me the veteran's last 4 digits of their social security number. It has exempt or non-exempt status.
Right.
And let me say that the exempt status is a disabled veteran,
Right.
and they would not have to pay the funding fee.
Right.
And the funding fee is that fee that it's a one-time fee that the veteran has to pay for the loan. And that fee is what really supports the program. So
can I ask you a follow up on that? One of the things that I've heard before, and I just do this, like this is just part of my business as usual practice, but I always tell my veterans and active duty military to have a copy of their DD 214 and send that to their mortgage loan originators. Some originators say that it's not necessary. I feel like you taught me years ago, like always put a copy of the DD 214 in the file in the event that that the VA doesn't issue or WebLGY doesn't issue an automatic COE. Do you think that it's best practice for veterans to provide their lender with a copy of their DD 214 as well?
I don't think it hurts, but right now the system is so in tune with the data for our veterans that we go on WebLGY and the system knows. It issues the certificate of eligibility. So yes, it's good to have there in the event we can't get it, and there has to be some sort of manual
You could
upload.
also use it for like employment history too, if needed, right?
That's absolutely.
Right. So it's a good idea to have it in the file.
It's a good idea to have it in the file.
So I'm not wrong.
No, you're definitely not wrong. That's definitely not wrong. But if there wasn't in the file and the system can issue the certificate of eligibility
It
as
may
well.
not necessarily be needed.
It may, that's exactly
Okay.
it. Sometimes, like you said, employment gaps, employment history, erratic history, we want to see when the term of service ends. And that could help with more of understanding the borrower's employment history. Definitely, for sure. And then also, if the system doesn't issue the certificate of eligibility,
Now
you need it. So yes, to that. So when I get it, it's great to have it in the file. But if I don't get it and I get the certificate of eligibility because we've been able to order it, then I don't condition for it.
Right.
Yeah.
Right. You guys remember that if you're enjoying this video and you have questions for either myself or Fong has agreed to answer the questions right on this video. So fire away, right? You guys are used to me always answering your questions. Fong has, I don't know if she knows what she signed up for, right? But Fong has ultimately agreed to answer some of your questions. So make sure that you comment down below and we'll get them answered for you. You were talking about the certificate of eligibility, and that kind of leads me into something else that I think is incredibly important. And it is what's referred to as VA bonus entitlement. And it's probably one of the number one things, Fong, that people or veterans reach out to me on this channel. It's like, wait a second, Jimmy, you said that you can have 2 VA loans at a time. It's like, yeah, you can. But wait a minute, Jimmy, I was told by my mortgage lender and the VA underwriter that I couldn't have 2 VA loans at the same time. It's like, I don't know who told you that, but they gave you, as we used to say in the Marine Corps, bum scoop, right? And that goes back to my point. I had a VA loan underwriter once at a previous employer tell me that a veteran could only get a VA loan up to $144,000. I said, wait a second here. That's not how VA loans work. And I literally had to educate the VA underwriter and said, no, this is basic entitlement. So anyhow, I'm moving on from that, but bonus entitlement, using bonus entitlement, helping veterans to understand that they can have 2 VA loans at the same time, and possibly, depending upon how much remaining guarantee they have from the VA, may even be able to get a VA loan with no money down, right? And so the way I like to describe it is let's say that veteran purchased a home in 2020 for $300,000, and the conforming loan limit is $766,550 in most counties across the nation. Some you can go higher, but you could use another VA loan up to $466,550 because that equals $766,550 if you're following along. So can you talk a little bit about what you're looking for when veterans are using a second VA loan or 2 VA loans at the same time in the VA bonus entitlement, and really anything else that you think is important that we should know?
Yes. So on the certificate of eligibility, like I mentioned, it's a story of the veteran. It will tell us if they have an additional loan out there. And what happens is it impacts their entitlement. So you get a different number. So the typical full entitlement is 36,000.
Right.
So in the event, if
But that's not how much we can borrow.
that's not how much we can borrow,
But veterans oftentimes look at that and they go, oh my gosh.
and that's why we need an experienced VA
Amen.
mortgage originator. So then when you're looking at a file, and I've done it many times, where we have a borrower he wants to keep his
Right.
current, she wants to keep her current VA loan because maybe it's a great rate, and they want to build their wealth in
This
a
is
different
so
way.
common.
It's common.
Yeah.
It's not outside the scope of the scope of everything. So when I'm reviewing the file, I make sure whatever county they're in, we have the 25% guarantee.
Right.
Whatever the sales price is, we look at 25% of that. That's a 25% guarantee. We take that number, we reduce the amount that they have in there. That's
They have
entitlement.
active.
They have active
Right.
entitlement. And then that potentially is the down payment that the borrower needs to make the 25% gap.
Right. But it may not be necessary too.
It may not be necessary
Right.
because some county does not, because of the county and how you do the math.
So in other words, if let's just say, I was going to a $1 million purchase price and, the conforming loan limit was, 766,550. The difference between the $1 million purchase price and the 766,550, I take that number, I multiply it by 25%. That ends up becoming my down payment.
Yes.
Got it.
Yes.
Got it.
Yeah.
Outstanding. That's helpful to know and understand. How long does a veteran have to live in a home before they can go out and purchase another home, new desirable location, bigger square footage house with a pool? How long do I have to live in my home before I can turn around and rent it out?
Typically, what we want to see is 12 months because you're signing that note, that deed, saying that you intend to occupy for the next 12 months.
That's good to know.
So-
I get that question a lot.
Yeah.
So 12 months.
12 months is what we want.
If I'm an active duty service member and I get orders or I'm PCSing, could that change like your approval or the way you would look at that perhaps?
Absolutely.
Okay.
We look at relocations as a different scenario. So that's the guideline. There's always exception to the guideline.
Right.
So we're looking at the full picture of our veteran. If they're being PCS to somewhere else, then of course we're looking at they want to buy another home. What are they doing with the current the previous residence that they're occupying? Can they carry both? Are they renting it out? Those are the things that we're asking. But the occupancy concern at that point does not. It's not there. They didn't ask them. The government's asking them to move. So
Right.
then we would look at the file a different way.
VA talks about occupancy, right? And a lot of veterans don't know. They're like, I had no idea I can do that. So they've lived in the home for 12 months, but the home that I'm purchasing, I'm aware of VA guidelines that talk about you need to move in the property within 60 days of closing. That's a requirement. And specifically, there's a lot of people that reach out to me who watch this channel and they're deployed, right? And so they're considering purchasing a home, from Japan or, Bahrain or for anywhere. And they want to buy a home stateside for when they PCS back to, CONUS that they can have their home. And I've always told them my interpretation of this is according to VA guidelines, and I want to just bounce this off you to make sure that I'm in the know here, is that if you are deployed, you can purchase a home as your primary residence stateside, and as long as you occupy the home within 12 months after your deployment, you satisfy the primary residence. I know I didn't ask you this question in pre-production and keeping you on your toes
I know
here.
the answer.
You know the answer, yes. All right, cool. So what does that look like?
Well, I've done that before. Like we've looked at files in the event where a veteran is out overseas or so. But the most important thing is their intent to occupy, and they can satisfy their intent to occupy with family, because often at times they have their family back
Their
in
spouse.
their kids, right? So their family is going to occupy that. So the concern of occupancy is not a factor at that point. Their family is occupying as their primaries, and when they return back to the States, they will occupy with their family. That's the thought behind it, because they want to have the veteran purchase and eventually move into the home.
Right. There's so many neat things that you can do with VA loans, and I feel like veterans oftentimes aren't aware of that. Like you had talked about it earlier, using the VA loan to purchase a house, right? Then you can turn around and pull cash out of your property up to 90% of the home's appraised value, or you can use it to do an interest rate refinance reduction loan. There's all these neat add-on features, and one of the neat add-on features that I tell my veterans is that it's not a one size fits all, number one. And number two, you can use the VA loan to purchase different types of properties, right? So you can, obviously single family home being one of them, a duplex, triplex, fourplex, condo, manufactured home, etc. One of the number one, or top, I should say, requests that I get from this channel is discussing VA multi-unit dwellings, right? A lot of veterans like this idea. They like the house hacking, right? They love the idea. And you even said it in our meeting. Fong's like, man, if I would have known about this, or if I had the opportunity to do it over again, I would have considered a multi-unit dwelling. Can you talk to us a little bit about what you as an underwriter are looking for on multi-unit dwellings, specifically related to some of the requirements with using the prospective market rents to qualify for the home?
When I get a multi-unit, that's a borrower, 2-unit, 3-unit, 4-unit, the veteran must live in one of the units.
Got it.
Right? So if the veteran would like to use the prospective rent, that means offsetting the mortgage, because if they can't afford the full entire mortgage, they have the other 3, let's just say a 4-unit.
Right.
They have the other 3 units to offset that mortgage.
In your opinion, though, doesn't that make the approvability of that loan? Is it more challenging to do it that way?
Yes, it is, because then there are requirements that VA does require. And one, you have to have 6 months reserves. And two, the veteran must...
6 months, what does that mean? 6 months of reserves?
6 months reserves.
Like mortgage reserves?
Yes,
Got
6 months, like whatever your mortgage is,
Right.
multiply that by 6 months. That's what I'm trying to say with the 6 months reserves.
I'm following you.
Yeah. And then the other thing is the veteran needs to have management history,
Right.
or have a property management company handle those three units. So that means that less cash flow to them, but that's what the VA feeling more secure of a veteran buying a multi-unit.
So here's the deal, you guys. It can be done, but I think you as the veteran or active duty service member need to roll up your sleeves, right? And understand that there's a lot of boxes that you need to check. You've got to dot your I's and cross your T's. So Fong was talking about, using the prospective rental income. My understanding of this is that it also has to show up on the appraisal, and the lender is going to use 75% of that rental income to offset the mortgage payment. Is that?
That's accurate. But then also I would like to add too, that if there are, in order to use that prospective rent, you also have to have a rental lease, because the thing is that if you don't have a rental lease, that's a little scary, because then now you're using the prospective rent, which no tenants are in there. So
Right.
VA is wanting to make sure that whoever is in that unit potentially could transfer that rental lease to you as the new buyer.
So if I'm a veteran and I just go, hey, I like that duplex, I like that triplex, fourplex, and so on, I just want to buy it. I don't care about the market rents right now. I can qualify for it on my own. Do I have to go through any of that?
If you can qualify without having the prospective rent, that means you're a solid buyer. You're
Yeah.
a solid borrower. So if in that case, we run it through the automatic underwriting system, and if you get an AUS approval, then we're good. We're golden.
You're good to go.
You're good to go.
All right. Did you guys see how she just said good to go? That's a Marine thing. So here's the deal about this channel. I have people oftentimes that tell me that I say good to go too much. And I've been called out on it before, but then I tell other people that, and they're like, no, keep saying it. It's what makes your channel unique. We love it, Jimmy. So good to go. All right.
Good to go.
I only cut out a few of those, okay?
So even Taylor will cut them out sometimes because I say it too often, which is...
I say it a lot. Maybe I say it too much too. I don't know. Now I'm going to start thinking about it.
It's the VA, or I should say the Marine in us,
Yeah.
which is obviously we can't shake that out, right?
I can't. I don't want to.
We
I
don't-
love it. I love it.
Amen to that,
Yeah.
sister. So one of the things that we were talking about earlier, we hit on this, but I do think it's important to revisit it briefly. Again, is the importance of working with a mortgage loan originator who understands the process, the VA loan process, because it is nuanced. There is, different types of things, whether it's, condition of the property, et cetera. And speaking of condition of the property, I think that this is something that's worth, mentioning that you're looking for. And as a SAR, the staff appraisal reviewer, did I say that right?
You did.
Yeah. So as a SAR, that's an additional classification that Fong has to be able to, she talked about it in the 4 C's earlier, right? The credit, collateral, et cetera, that she has to approve not just the veteran's credit, right, or income. She has to approve the house that you're buying. And so one of the things that I learned earlier on in my career is that VA has what's referred to as, minimum property requirements. They're looking that the property is safe, sanitary, sound. When you are reviewing VA appraisals and or comparables, can you tell us what are the things that you're looking for? I know I'm kind of putting you on the spot here. Some of these questions weren't in our previous meeting, but can you kind of give us your, underwriter take on that?
Oh, absolutely. That's what I do all the time. So when I get an appraisal in, we have to go through a system, which is the web LGY.
That system is where you retrieve documents for the veteran certificate of eligibility, the appraisal, so forth.
Absolutely, okay. Absolutely. And that's where I go to enter the data from the appraisal. And that's where I get the appraisal. That's where I get what they call a VERA score. And a VERA score is...
You're teaching me something right now.
Okay.
Keep going. I'm listening.
Okay, it's a VERA score. It's actually this report that scans the appraisal and fires out all the alerts, such as the discrepancy on the appraisal. And so my job is to review that report against the appraisal. And if it's a high-risk file, then I have to really review the appraisal in a lot more scrutiny, look at the comparables, look at all the adjustments. And each appraisal has the comparables, like you said, 3, 4, however many that the appraiser wants to use to justify his value.
So if you have to ask additional questions about the appraisal, then you condition that. That's a part of the loan approval process, and the mortgage loan originator / processing team may need to go back to the appraiser to seek clarification on questions that you have from running that through this VERA.
Yes. Well, it already comes to us. So it's automatically done on every single VA appraisal loan. And the thing is that where the timeline for the appraisal is actually a lot quicker for when reviewing an appraisal, because SARs have only 5 days. By the time it uploads to the system, we have 5 days to review it. And when we're reviewing that file, we're actually communicating with the appraiser. It's not the processing team.
I see.
Yes, it's not the processing team, because it's our responsibility as the SAR. And this is the delegation that VA has issued to us because we've met the requirement, which is the test cases that we need to go through. And we had to review all a certain amount of appraisals in order to get this particular delegation. So I review the appraisal against this VERA score. And if there's a certain number that I see, and it's above that number, the risk of that appraisal, the valuation of that appraisal is a lot lower. So then my scrutiny of the appraisal is a lot less. But when the number is below a certain amount, then I'm reviewing and I'm having that conversation with the appraiser as to why he used these comps, and for him to further justify why that value is what it is.
Understood. I interviewed a VA appraiser
I remember that.
back.
I saw that. It was a great one.
I appreciate you saying that. Yeah. And one of the things that I thought was really neat that he talked about, he's like, Jimmy, I don't give a rip what type of loan the borrower is getting. I care about the comps. And I think that there's this, you used the kind of term earlier, scrutiny that people put on VA loans, in particular the appraisal process, that, they come in less than what the purchase price is paid for. There's all of these, conditions that have to be met on it and so forth. Can you share your experience, just kind of the by and large? Obviously, there's certain scenarios that take place with VA loans, et cetera. But can you share your just general experience with VA loans? How has it worked? With VA appraisals? Has it been difficult? Has it been streamlined for the most part? What do you see? What do you see there?
I have not had an issue because the VA appraisers are, they have certain guidelines that they have to meet in order to maintain their status on the VA panel.
Interesting.
Right? So when I reach out to them, they're responding back to me. And if they're not responding back to me, I reach out to the Department of VA. And then
let the VA know. And
I let the VA know. But that's, I don't think I've ever done that. Maybe one time in my 24-year career as an underwriter. I mean, it's rare. So the VA appraisers, they are communicating with us. If not by email, I'm calling them, having that conversation. And often the time we easily get that resolved. And whatever it is that I have a question on, they're responding back to me. So I have an immense respect for VA appraisers and what they do.
That's good to hear, because I feel like people just bag on our VA appraisal. They think that because we're getting a VA loan, it's going to come in at less than value or something like that. And I've been trying to really share with veterans and real estate agents mainly that, like, don't let people get away with that. You know, that stuff is not true, and it adversely impacts or affects a lot of veterans and active duty military, and it talks them out of using their VA loan. And, you know, I've talked about this before. It's like there's VA loan haters out there. And as much as I love and respect Dave Ramsey, I disagree with his take on VA loans, where he talks about VA loans being more expensive to veterans and active duty military. I'm just like, Dave, that's not true. Our VA loan has no private mortgage insurance, number one. Number two, it doesn't have, or it has, I should say, lower mortgage interest rates when compared to conventional financing. It saves them money, both in the form of PMI, right? FHA obviously has PMI, et cetera. And it doesn't necessarily have higher fees associated with it. But to your point, you said this earlier, it's like, we don't want veterans to go into a home broke, but just because they're not putting any money down doesn't necessarily mean that they're going into a home broke. We want to set the veteran up for success. So I guess what I'm trying to say is nobody gives us a hard time because we shop at Costco, right? Because we save money at Costco, we buy in bulk. Well, you know, using your VA loan helps and sets up veterans to do great things and build wealth, you know, through the acquisition of real estate. I want to ask you about employment, right? I think that there's a lot of confusion that veterans think that they have to be on their job for a specific amount of time or 2 years before that they can get approved for a loan. And so, you know, what I've always shared with vets is, look, guys, we have to have a 2-year work history. That's the most important piece of this. We have to show that you have a 2-year work history. Now, if you've changed professions, if you've gone from having a salary to a commission-based, you know, profession, yes, there has to be a 2-year history of receiving bonus, overtime, commission, et cetera. But what are the types of things that you're looking for as far as, you know, employment stability when you're underwriting and approving VA loans? Can you talk a little bit about that?
Right. When I'm reviewing a file and I'm reviewing the income piece of it, I'm looking for a calculation. I'm looking for the year to date. I'm looking for the previous 2-year history, W-2 wise, and I'm comparing the numbers. I'm looking at the numbers going upward, and if there's a drop, I would like to know the reason why, and that's with documentation, getting more information from the employer or the borrower themselves, answering those particular conditions. So I'm looking for erratic history. So if a borrower is if their job is, say, in the film industry, right? They go from different jobs to different jobs. But they're part of a union, right? So we gather all their W-2s. We look at the total amount of W-2s from the previous years, and we look at the year to date. So erratic in that case is not an issue because it's in the same industry. So we're looking for stability and we're looking for trend. And I think that's the biggest thing. Stability
and trend, you guys, you hear that? That's good to know. And so I want to jump in and just ask one more quick question. So if I'm an active duty service member, right, and let's just say that I did logistics in the Marine Corps, I get out of the Marine Corps and I get a job as a computer programmer earning $56,000 a year, just because I'm not in the Marine Corps doing logistics, but I have a salary as a computer programmer earning $56,000 a year, I can still use that income to qualify, correct?
Absolutely. Even if you're on the job for 1 month, I would look at that as stability because you're moving from one employment to the next. But we would want to know, is this in the same industry, or are you working the same type of job? So I've sometimes used a resume to help to fill in the knowledge of, okay, what our veterans doing now versus what they were previously doing. Logistic, that could be almost any job, right?
Sure.
Because you're admin, you're doing.
So just tying those two together.
Tying it all together.
But it doesn't mean that I have to be in a new profession using logistics. It's using the skill set that I picked up or that I was equipped with in the military in these jobs that I'm using in my new profession/career.
I think that's perfectly said, because then a resume really has filled in the gap for me. And then that there is something that we could use as well. So
perfect.
Yeah.
Well, we're almost done, but I still have a couple more questions for you. So I think that this is tremendous that we're doing this. And the follow-up that I had specifically to employment, there's a lot of active duty service members that reach out to me from this channel. Oftentimes active duty service members, they're EASing, their term is expiring in less than 12 months. A lot of mortgage loan originators don't know to look in an LES report, look for that date on there. That blows up a lot of loans. A lot of people that call me in the past or from this channel, they'll say the lender didn't tell me that, I had less than 12 months. Now I can't get a loan. And so one of the things that you taught me years ago that I continue to tell veterans that watch this channel is that we need to be able to document what the service member is doing when they get out of the military. And so if it's not for 6 months or 7 months, if they have a job offer in the file that states this is what their income is going to be, number one, number two, that job offer has been accepted, right? What we do is we compare and contrast that to what they're currently earning right now, right? And we take the lesser of the two to qualify that active duty service member. So ensuring that they leave the military, right? And they start immediately, there's no gap of employment. Is that how you see that specific scenario for active duty service members that are getting out in less than 12 months? Or am I missing something, or is there something that you would add to that?
I've done that many times. So we have veterans that are leaving the military and then they're starting a new job. So one of the things that we want to see is during that time frame, from the time that they leave the military until the time they start the employment. So I'd like to also add that yes, the contract is important because we need to know and compare the salary. But if there's maybe 3 or 4 months gap in between, we're looking at assets to make sure that they can make the mortgage payment. The most important thing is, can they make the mortgage payment? Are they a safe bet? Is this a sellable loan? Can I paint this picture to my investor?
Because you're putting your name on it. Fine.
I'm ultimately responsible for the decision making on the loan. And when it gets to my desk, I have to make sure, and when it leaves my desk, it's packaged in a way that paints the story that you and I know about our veteran. The investor has no idea. So we need to package the file in a way, present it in a way that makes sense, and that this veteran can make the mortgage payment.
Right. One of the things that I think is funny is I'm a pretty passionate guy, and Fong is a pretty passionate gal, and we're both Marines. And when we both believe in something here, sometimes in the past we've had we haven't always, how should you say, been this nice to each other, right? If I believe it, I'm just joking, but if I believe in something, she believes in something. But you know what? We figure out a way. We come up with a solution to ensure that that veteran or active duty service member is getting into the home. The last question that I wanted to ask you about is this idea or guideline with VAs with residual income. I think a lot of veterans don't understand residual income. We've talked a little bit about the credit, but now I want to talk about employment/income, the residual piece. Can you explain, is residual income essentially net income and what the VA is using, like a base number to qualify the veteran? Can you unpack that a little bit for us?
Yes, the residual, what it is, if I can make it as simple as possible, think of the residual as the money left over making payments to the majority of your expenses. We're talking the mortgage, we're talking whatever installment, revolving that's on your credit report. We're also looking at childcare expenses too.
Right. So a lot of people don't remember or know that about VA.
That could totally derail.
That's a gotcha.
That's a gotcha right there. And if you're not working with someone that's experienced, that has been missed many times on my loan files. And
you guys hear that from Fong. If you have childcare expenses and you don't properly disclose that to the mortgage loan originator, that could show up and that could blow up your loan while you're in the process, causing that unneeded, unwanted, unnecessary turbulence, right? So take it from Fong, childcare expenses. That is one thing that's unique to VA that has to be included in the file. You were saying?
Absolutely. So the residual itself is that money left over, and it varies. It varies based on your household size, and it varies within the country. So VA has a particular guideline that's what the veteran needs to have in order to live. That's the discretionary. They need to buy gas. They need to buy food. And if you don't meet that minimum requirement on the residual, you don't have a loan.
So Fong, do you think it's a good idea for me as the mortgage loan originator, God bless you. Do you think it's a good idea for me as the mortgage loan originator when I'm taking applications? I feel like I already know the answer to this, but I'm going to ask you anyway, that I need to be running a residual income calculation as the MLO to ensure that the veteran has been properly pre-qualified to use that loan?
Absolutely, because if you don't enter in that data, the automatic underwriting system will issue an approval that could not be correct.
It's called GIGO, garbage in, garbage out.
Yes, and I hate to do that too, and I hate to say that because we're all like it should be very educated, but again, not every single mortgage originator is experienced, and they know that. And I've had many loans go through the system where the residual is miscalculated, and you have an erroneous automatic approval, and that there is something that a residual is so important, and that's pretty much critical of a VA loan as well for the part of the approval.
Ladies and gentlemen, my friend and yours, Fong Lee, she came out here today from California. If you missed it already, she got up at 04. She believes in this mission enough that she wanted to be a guest, right? Or I invited her to be a guest. She graciously accepted to come pour into us. And I just can't tell you how deeply thankful, grateful, appreciative, whatever other adjective that we could throw in there, noun, verb, whatever, right? We just appreciate your time. So guys, if you've enjoyed this video, if you've enjoyed Fong pouring into us today, consider showing your love, liking the video. Also, if you want, subscribe to the channel. It helps us to promote, veteran awareness when it comes to VA loans. And lastly, if I can personally answer any questions for you as a mortgage loan originator that happens to specialize in VA loans, I'm not saying, I'm just saying, by all means, reach out to me. I just wrote an ebook on VA loans, answering the top 11 questions that veterans and active duty service members have when it comes to VA financing. You can get a copy of this book for free. All you need to do is go to my website, VAloans4vets.com. That's a bit of a shameless plug there, right? Go to the website, check it out. If you have more questions about VA loans, or you'd like to start the process to get your VA loan, right? My name is Jimmy Versalino. I'm a mortgage loan originator. Through my partnership with my company, I am licensed to lend in all 50 states. So no matter where you are, I am here to lock arms with you and help you put some rounds down range. Good to go? Good to go, Fong?
Good to go.
All right. So thank you once again for being here. I hope you've enjoyed our time together, and maybe, just maybe, we can convince her to come back out and shoot another video with us when the time is right. We'll call it I Interviewed a VA Underwriter 2.0. Fong, thank you again.
Thank you, Jimmy. I had a wonderful time. And again, you're such an inspiration to me. I love your videos, and you're doing a great thing for our community. So thank you.
I appreciate you. Semper Fi.
Semper Fi.